Hello again. So I'm actually halfway through a set of videos back to basics, but it's now getting near my trading time, 6:37 in the morning, so I thought I'd analyse the charts for a trade, but I thought I might as well video it from a clean chart down to a sort of slightly messier chart. But I'm going to do the quick analysis, try not to involve too many lines. And starting on the H4, what do we know if we're inside an H4 candle, like this little red candle here? Let's zoom in. We know we've got to break out one way or the other in order to proceed. Price has moved 110 pips, average daily range is over 20 days, remember, which is way before the absolute mayhem that's happened in the market, so I ought to change that to 4 or 5 days. In fact, I'll do that now. Indicator list, this thing here. Oh, you can't see that outside the video, sorry. Inputs, we'll change it to 5 days, last 5 days, and see it change to about 400 my guess is. Oh no, ADR's 296, so it's because it's calmed down after the... Let's change it to 10 days then. Why is it getting terrible these days? And my fingers and thumbs. Yeah, a bit more, 368, that'll do. Close that. So, yeah, so back to the point. Let's put high and low on previous H4 candle. That little indicator there, pretty imprecise, telling us we're below the daily low, so daily open, so that suggests that shorts are on anyway. That's on the high. That's the low. And then let's face it, if we want to go any further, we've got to break the high of that one and the low of that one. So we'll stick the low on that as well, and the high on that as well. And we might as well continue left to right, or right to left. Keep stacking these levels on, because once it's broken that extreme, it's got to get through that one, and once it's broken that extreme, it's got to get through that one. So there's a ton of resistance above us. We could make life easy rather than drawing all these and just put the levels on the daily, upper time frame, but you know, it works the same. You'd have less lines here, you'd have a gap to the daily high, which is why I talk about trading the gaps. But as it is, you can see there's far more resistance above us than there is support below us. The support levels relevant to this potential trade are these as well. If we've not broken and closed through these two, then they are relevant, because as it stands, we haven't closed through the low of that one, which means this, which was also by chance the low of that one, which is no coincidence, it's failed to break that support there. With that one there, it's a doji, and it's tried to break it with the previous one to the new candle here, new candle 42 minutes ago, and it's still trying. We can continue drawing lows on here again. That was the low drawn on that one. We can bring up that date there, the precise 31st of the 3rd 20 at 0 midnight. This one, we put this one on as well. It did go on there, but it's almost identical. It's a double bottom, as they say. Might as well put that one on there, because that will cause a bit of a problem with price, because that low still hasn't been broken either, remember, and I consider it a break with a close below on the same time frame. And then that one there, and we can carry on as well. But again, the daily chart would make life a lot easier for you, but I'm trying to reduce the information overload on this particular video. All I'm looking for is 5 or 6 pips. If I get a gap of more, then I'll take that. So then the H1 will tell us some more, give us some more information, because for the veterans of my YouTube, and they've been watching me for years, some of them, they'll understand what I'm talking about. For the new guys, just go back. I implore you to go back and watch a few or 10 or 20 or 100 of the videos. You don't have to go back too far, because this has evolved. When you see this RSI histogram on my chart, that's when you want to start following it, because this is new, but I love it. We can get rid of these because they're just superfluous. It's just the one over the hourly 8MA crossover. The hourly is telling me we've got a low, a high, high, low, a high, a high, and a high, a low, lower high, finally a lower low and a break. Just keep singing the songs until, oh, we've only broken that support. I do apologise. That is relevant, and I don't mention this very often, but obviously if you've got a big gap between that support, and this is true support, valid support, because it's broken the high of that, then the gap between that and that can be traded. We've got this massive H4 to cause us problems here. That was, let me just highlight that because it can get confusing. I think that was the previous H4's high. Low rather, do apologise. There it is there. No, it was yesterday's. It's the one. It's from that one there. This must be almost identical, and it's hidden or overruled by the one. I'm not sure how this. 31st of the 3rd, 4 o'clock. Oh, we are the 31st of the 3rd, aren't we? Do apologise. Oh no, it has. It's worked. It's when you put it below the particular candles, it tells you. So we still need a break of this in order to go short, and we could easily reverse here to go long. H1 doesn't give us really much information apart from that low's been broken. So we could put that level on, although it wouldn't be a level I normally use, but in the absence of anything else valid, this low's not been broken and closed below, so that would be a potential problem to the short side. So, bit messy here. M30. What does that tell us? Low, high, high, low, high, high. I think that's the higher high. 943. 939. That's the highest high there. So this we could put on the M30. That's the close through. That was a valid short there. And I missed it because I was making videos for you guys, but that was a perfectly tradable short to test that H4 low, as you can see. I would have taken it to the H1, which is just there. I think it's the H1 anyway. But it's 9 pips. I mean, that's brilliant. Nothing wrong with that at all. Or was that the M30? No, it is an H1. So, and that's what I mean by once the M30 is closed, you take it to the next level, H1. That's not closed with H1, so that's not a valid short signal now. The H1, we could trade to, we could trade to the H4 because of this, but be aware, because the H1's not been broken, it's a risky trade. And just back to the H1. The H1 resistance there, support there from that candle there. This is getting a bit confusing, guys, but this for even the guys that have watched me for ages, because I've never mentioned this break here, but I do use it, but I try not to bring it into my analysis for teaching the method. So this is a totally new thing there, but we know it's a valid support, and I don't think I've mentioned it. Forgive me if I have. Veterans, Ben and Alex, and possibly Paul, if he's about watching. But you understand what I'm talking about now. We can go to the 5-minute chart while we're waiting for this to do its stuff. All this is doing is just pulling back to test old support as new resistance, building up for what I consider to be a potential short trade, but it can turn on a sixpence, as you know, guys. We are 6:47, we're nearing the Frankfurt Open. I would prefer to have had that 9 pips under my belt had I not been making back to basics video set. But the point I want to make is I'm not worried. It's not, don't get anxious. And anxiety, I think, is what kills most people. Maybe they've got to get their trade before they go to work in the morning or whatever, or they've got family commitments. So you enter trades through anxiety, the need to make that trade, that money, before you have other commitments to fulfill. Try to avoid that if you can, guys. This works any time of day, and that's why I devised a method of trading it on the 1 minute, so I could just scalp, arrive at the charts, do my line analysis with all my levels, and take a trade when I've got come in from a dog walk, or when I've come in from doing the horses, or when I've done something else, had to take the missus out, whatever. Do not get anxious. There's hundreds of trades, hundreds of or tens of currency pairs to look at. The method works on all of them. You need to acclimatise yourself with a particular currency pair and how it moves, because it will move slightly different, and that in itself can cause anxiety. Spikes, you need bigger stops, and so on and so forth. So anyway, let's go down to that 5 minute and have a look at the internals of this potential trend here and see what it's doing. We've got the hourly 8 MA on the 1 hour chart, should I say. We can do the trend analysis here: high, low, lower, high, lower, low, and break here, continuation. Or we can sing it to that larger swing: high, low, lower, high, lower, low, break, and potential continuation to the downside. As you can see on this 5 minute chart, there's no way I can sing the trend song. I don't want to be trading long below the hourly 8 MA or the 96. It's the EMA. I always call it a MA because it's a moving average. I just should try and get in the habit of calling it the hourly 8 EMA. Not sure what this spike is here. I think there was Chinese news out during the night. It was green news. In fact, I know it was because I checked it up. Always try to check your Forex calendar. We've got British news at 7 AM this morning. So that's probably why we had all that sideways motion. It's probably why we've had the breakdown south. I'll check what the news was on my other laptop. Hang on, where is it? I think it's CPI news or something. Consumer Price Index stuff. Tuesday 31st, 7 AM. Current account. Oh, sorry. Oh, and it's only orange news, not red. Low impact, so or medium impact, should I say. So then we've got news at 1:30 PM, middle of the day. So I wouldn't worry too much about low impact news, but sometimes it can affect price, so always be aware. Try and avoid trading the news times. So what does this tell me on the 5 minute chart? Well, I should be trading short. Yes, I've told you why, because we're below the EMA. The problem is this EMA hasn't got much of a slope on it, and whilst I haven't mentioned this in my analysis, the slope is important. If you can get it when it's in a deep slope, then you know you're entering the trend, and as near to it to enter a trend with valid signals and valid candlestick analysis, then you can't go far wrong. I haven't mentioned this indicator for a while. This is handy, just as a added tick box, if you like. Don't be trying to enter a trade short if the pound in this instance is strong, showing down here. You are definitely swimming against the tide. That's why I have this lot on here as well. Some of them I should just dump especially CAD-J. I'd never trade that. ACAD, never trade it. But it's handy to have them if you're considering trading Aussie dollar, US dollar. You just want to see what's going on with another pair related, or US CAD. You want to check what the CAD's doing. That is just by the by. I don't trust this indicator that much because it's literally, it can change in a blink of an eye. If you get a big candle like this, say for example, you go from being bearish on pound to being bullish on pound within one bar, within 5 minutes. So what are we looking at now? We're looking at this indicator here. I like it to have broken. If I was considering short as well, or entering short, this is where I use it as my belt and braces on the 5 minute. If this popped down just below that 20 level and broke that there, then this would be a good potential short. Much the same as this point here, where I missed out on a trade through making videos. We can draw a slope on that. Oh, I should mention before I forget as well, divergence. I do like divergence, and especially it seems a lot more reliable on this indicator, the histo again. So it's a win-win, this histo, than quite often on this thing. We haven't got divergence. I haven't even checked for divergence at this point. I wouldn't be, if this was this low and this wasn't low, this showed divergence, I would definitely not be wanting to go short on this. So but if this high and this high and this high showed divergence, i.e. this was lower than that higher high there, then that's why I would consider getting in. But you can see the MA is absolutely flat as a pancake. So there you have it, guys. That's all the levels I need on my chart. I've got my new gaps now. When this is broken, this becomes a good target for the reasons I've explained earlier. I would add more levels to this, but I don't want to complicate it. When this level obviously is a serious level, it's probably an H1 high or something, bearing in mind we're on the 5 minute chart. I've only really drawn the levels in on the short bias because that's my bias. This is a potential problem between here and here because it's obviously created some sort of support, i.e. the flip zone, where the price goes from short to long. They pushed it down, it's failed to go further. They came in, they pushed it down, and then something's pushed it back up, or the buyers have jumped in, and that's where the candle opened and closed. So that's my morning analysis of GJ. As usual, the disclaimer: do not trade what I trade, what I describe. Do your own analysis from the learning of my method. As I say, if this gets broken with a bit of power and your CCI, stochastic, or whatever oscillator you choose to, histogram rather, you choose to use, then if they both agree, that's your belt and braces. Now, wouldn't you know it, this is potentially reversing to the long side. There is no way I want to be trading this. I could actually draw a descending trend line on here, a valid one in my opinion. From that high connecting that low there, that wasn't valid until this low here was broken. There, there and there. That's valid. This is just a wedge here. It's not a valid support line, but it's a pretty little wedge you can draw in your chart. So that's it. I'm not sure of the rules of wedges. I can never remember it. I can't even remember the supply and demand one, distribution and accumulation. I learnt it last week actually. Accumulation is when the price is at a low and looking to go up. They're accumulating buy orders, and distribution is this point here when they're accumulating sell orders. And the accumulating people are not the retail traders. They are the institutions forcing the price up using their own money by selling and buying, and till they get to the point where there's no one else interested in buying up there, and then they force the price down again. So break of that low there, that red bar there, through the 20. Careful though, if it's a big candle spike and you're right down here, then your target's already been hit. You can't get in, or you shouldn't get in then. Nice little breakthrough and close. Nice change on your MACD or CCI that follows their rules, and you're good to go short, in my opinion. Okay, but remember, 7 o'clock in the morning is Frankfurt Open, and that DAX will cause the price to go bananas. So be careful guys. Thanks for watching and have a good day.